Welcome back, everyone. Boxed is one of many companies feeling the pressure from rising inflation, citing higher fuel costs as the main driver of cost increases in supplies and shipping. The e-commerce platform is aiming to combat these rising prices with its new multi-year agreement with FedEx. And joining us now to help us break this down and discuss is Boxed CEO Chieh Huang. Chieh, great to have you here with us this morning. First and foremost, when you think about how many of the costs are being passed on to the consumers, where are you looking to mitigate some of that pressure that end consumers are seeing right now?
I mean, end consumers are seeing it from everywhere. So at the same time, we have to meet those cost increases everywhere as well. So between signing a brand new multi-year agreement with FedEx, so lowering transportation costs, building more fulfillment centers so we can get closer to them, further reducing transportation costs, and then also pushing back on some of our vendor partners to say, hey, that's a little bit too high. Show me why that cost increase should be swallowed by us as well as our consumers. Those are just a few things that we're doing to keep costs low here.
A really interesting thing over the course of the retail earnings that we've seen this year, this quarter particularly, is that there has been this flight towards wholesale or towards particularly buying in bulk. What have you seen from the consumer over that period of time, especially as this typically can be one of those pre-recessionary indicators and giving some type of indication about what the strength of the consumer, where that lies?
I love that you asked that, Brad, because that's exactly what we're seeing in real time. So when you think about what a consumer does in prior, or what a consumer did in prior downturns, they really kind of traded down or up. And what do I mean by that? I mean, they'll trade down to a dollar store. They'll trade down to a hard discounter. The folks who can afford it will actually trade up in quantity, because if you're buying more, if you're buying in bulk, you're going to save a little bit of money. And you're seeing that in real time. When you looked at earnings last week and this week, you saw some of the traditional retailers have a pretty tough quarter. But with BJ's wholesale print, they did quite well. With our print last week, we did quite well as well. So we're really looking forward to potentially capturing some of this tailwind, as you said, might be countercyclical.
And Chieh, it's Julie here. What can you tell us about what you're seeing now in real time in terms of those kinds of reactions? In other words, are you seeing an uptick from higher income consumers? Are you seeing lower income consumers pull back a little bit? What are you guys seeing?
Yeah, we're seeing it. Well, here in the facility today, as you can see behind me, we're rocking. So we're seeing a lot of different factors. So definitely we're keeping an eye on private brands. So we have a great private brand here. So within the channel, consumers will say, hey, maybe I'll get a little bit more, or maybe I'll get a little bit of a discount if I buy that store brand that I otherwise would not have tried. What we're also seeing is brand new folks coming into the site, brand new folks really reacting on behalf of some of the headlines that we've been putting out in terms of emails. So if I rely on the data is showing us that the conversion rates, whenever you talk about inflation or gas, it's really high, because this is the zeitgeist today. I mean, the show is all about that today. And so consumers are reacting. The third thing that no one's really talking about is the reopening of America. So what we're finding over the last 2 quarters, our B2B business is on fire. So Q4, we announced it was up 50+% year over year. There was sequential acceleration. Q1, it was up over 60%. So there's a lot of counteracting forces going on. So it's a pretty wild time in my shoes.
At a time where we do see also a shift in spending from goods over to services, and that's kind of cyclical at this point in time too, going into the summer, where particularly, even in the reopening, are you watching the consumers not just trade down, but also manage not their own cost plus what they're paying on top of that, because that's being passed forward to them on so many different measures across the product aisles?
That is so true, Brad. The previous guest, I think she was very astute in saying that, hey, it's not just a particular channel. It's like the consumer is being pinched in all different ways. So it's not necessarily prices went up in a certain channel, so they'll not buy anymore. It's just, hey, prices are going up all around, so I've got less money potentially for discretionary spending. So the good thing about Box is that just about everything we sell are consumable items. Now, with that said, we did open up a third-party marketplace that we do sell a little bit more general merchandise than we have previously. So we'll have a close eye on seeing, hey, what the uptick is on some of those general merchandise items, because most of what we sell, you need to run your household. Some of the general merchandise stuff, you don't. So we'll have a close eye in the coming months on seeing any reaction from the consumer on that side of the house.
All right, Chieh, we're hitting the top of the 10 a.m. hour. We got to leave things there on the day. We'd love to have you back in the future and continue the conversation, though. Chieh Huang, who is the Box CEO, joining us this morning.